Morning mortgage update. What the heck is happening with interest rates? We had the Fed's cut the Fed funds rate. Rates went up. They continue to show signs of getting worse. Why? What do we have to deal with this week? What's in store for us this month? We're going to take a deep dive. But first, this is the most important thing that I want to talk about right now. This is the longshoremen's potential, the dock worker strike that's happening up across the East Coast and the South. This is huge. This is the largest union in the United States. There's 45,000 employees. And if you guys remember what happened in COVID when the ports shut down, it wasn't good for inflation. So there's some underlying inflation scares on this strike that could potentially hit tomorrow morning at 12:01 a.m. So there's some things you need to know about it. First off, 50% of all of the imports come through these ports. That's a lot. They will continue to ship all of the military goods that are coming in, but a lot of the major manufacturers like Walmart, Target, like all of these places, they get their products through these ports. So it's going to be interesting to see how long it'll take. They're asking for higher wages, and they're asking for no automation of their jobs. So they don't want AI to take over. So it's going to be a hard battle with AI becoming such a huge part of the overall industry for the unions to kind of come to an agreement. So these are the ports that are all being affected. Again, it's all up and down the East Coast and the South. It's going to be really interesting to see how this pans out. The markets are a little skittish right now. They're kind of holding a pattern of wait and see. Again, this is probably going to affect us later on, but the markets react now to what they believe will happen so that they don't lose their shorts later, right? So they're going to act according to what they perceive is going to be the overall impact on this. But the overall impact on inflation is usually after a couple of months of it hitting stores, and it has to really trickle down through the economy. So we'll see how this happens, or what happens to overall inflation over the next couple months. I'm hoping they can come to a quick resolve on this, but it's a bad timing. I mean, we've got the holidays coming up with all of those imports. Will have an impact on what we can get for the holiday season coming up. So here's something that could fix it. It's called the Taft-Hartley Act. So this gives the president the power to intervene if it impacts the health and safety of the overall nation. Basically what it does is says everyone has to stay at work, but there's an 80-day period where we're going to figure out this and negotiate while they're working. Well, there was a leak through the White House officials that said they've never invoked it through the White House. It's been there, but they're not considering it now. So there is a potential for them to step in, but right now they're not considering it. They don't consider it a major threat to the overall health of the economy or the safety of the nation. So right now they're just going to let it go. But if it does become an issue, this could be invoked, which could potentially help the situation. So we'll just keep an eye on that. I'm not terribly afraid of this, but if it goes on for a long period of time, it could be inflationary, which could lead to rates either staying where they're at or slightly higher, or maybe slowing down the rate of which they're dropping, which we're going to be careful of to watch. So anyhow, here's what bond markets are doing. This day right here, whoop, there we go. If you look where I'm moving my mouse, that was the day that the Feds lowered the interest rates on the Fed funds rate. The next day we recovered, and then we lost. We recovered a little bit, then we lost. Then we're right on this 25-day moving average, and we're hard set on that. So if we close below that, that could be bad news for mortgage rates, because then we'll drop all the way down. Typically, whenever we pierce through a level of a resistance like that, and we stay there at the business day, at the end of business day, the next morning, it's an easy fall off that wall down to the next floor. So hopefully that won't happen. It tried to happen last week, and it closed right on it. So we'll really watch that. The 10-year is above that 25-day moving average. So its momentum is going upward today. We'll see what that does. But we've got jobs reports coming out this week as well. So keep in mind the Fed is more influenced right now by the jobs numbers than they are the inflation numbers. So last week, inflation when it was came out was pretty right on what they expected, but a little bit better, slightly better, but it didn't really impact the markets. Employment numbers are really going to make an impact this week. So Thursday and Friday, we'll see what happens there. Here's where rates are, and I can't stress this enough. This is for the perfect borrower, guys. If you have a 620 credit score, you're not getting these rates. But this is with 780 plus credit score, 400,000 loan amount, 30% down, purchase of a single family detached home, not a condo, because those rates are higher. But this gives you where the perfect person is. This is one of the things I don't like about the mortgage industry is when you go into Mortgage News Daily, they give you the best of the best, what the best position is. And it, for me, I think it sets improper expectations for those borrowers who may not be perfect. But that's my whole, that's my rant for the day. But here's where we're at. If you're perfect, you're at 6.2 without any points. 6.4 in jumbo, 15-year, you're under 6%. FHA, you're under 6%. So we're in a pretty good spot. Now, a lot of people are in the sevens. They're talking about refinancing. So they're going to be somewhat disappointed to see that they may only be in the mid to high sixes on the rate for a refinance, even though everyone's advertising they're at 4.49 on those mailers we're all getting. Well, yes, you can get that rate. Remember, you can get any rate you want if you're willing to pay the price for it. So you don't want to spend 3 to 4 times the normal closing costs on a refinance when you can just wait 6 months to do that. Or you can do a refinance for free, nothing rolled in, and maybe a little bit better rate than what you have, but not as low. And then you can refinance again and again later, as long as it's saving you money and it's not rolling anything into the loan, then it makes sense to do multiple refinances. As long as you're cutting the years on your loan and you're not adding anything to the loan balance, and you're not coming out of the pocket with anything. So there's some smart ways to refinance, and I've been talking about that with all my customers lately. So here's what's happening this week. We've got Thursday and Friday as the main day. Wednesday, we've got payroll change through ADP. That's going to be interesting to see. Jobs openings, JOLTS numbers on Tuesday. So we've got it's jobs week, basically. Today, Fed was speaking. Didn't really hear that this morning, just because I was too busy kind of going over what's happening with the whole longshoreman strike. But big week for jobs. And remember, that's what the Fed's really going to be looking at. So we could see rates get better if the jobs are weak, if the jobs come in strong, or even a little bit more than expected, rates could get a little bit worse based on where we are on the charts. So that's what the technicals are saying. And remember, our pre-qualifications are guaranteed. The seller will get $5,000 cash if we don't perform. Keep that in mind when you have any listing and your buyer and you're looking to get a potential buyer acceptance or accept their contract. This could be a little added protection for your sellers if we did the loan for you. So that's kind of where we're at right now. There's not a lot going on today, but the jobs numbers and that strike are going to be very important to watch through the rest of this week. So any questions on what's happening with rates, maybe what the Fed's doing, any questions out there, any weird scenarios you're seeing? I'm an open book right now, Q&A on the way. That's what we're here for, is to help. So have at it. Let me know if you have any questions. Thank you for the happy birthday wishes. There's a bunch of cakes falling on my screen now. So thank you very much. Any questions? All right. Well, that was a quick one today. I'll stay on if you guys do have any questions. And otherwise, have a phenomenal day, and we'll talk to you guys soon.
Thank you.
Anytime, guys.
Hey, Sean.
Hey, Lars, how you doing?
Good morning. Good, thanks. Just quick question. Has Katrina Palombo come back with that second letter yet?
Not yet. She sent me some verbiage on what they can say, which is still not going to work.
No,
I'm
shoot.
not sure if this specific scenario we're going to be able to get away with because they won't take the word contracted out of it. It's kind of a loophole in underwriting that if you get an employment letter stating that your start date is a certain amount, your salary is this, you have guaranteed hours of this, then we can use that as in lieu of pay stubs. But in this case, the verbiage we're getting so far hasn't been presented. So I'm gonna redo that again today and send that to her based on what it looks like. But if they're not willing to put that into that letter, she could have to wait 2 years from the time she was started the self-employment as 1099.
Unless she gets that letter. Okay.
Correct. Yeah.
Thank you very much as always, Sean. You're the best. Have a good day.
Got it,
Be great.
buddy. We'll talk to you soon.
Yep, bye-bye.
All right, see you.